strike. 45,000 workers on strike. Tom Hayes joins me to watch the market for us. Do you expect Biden to intervene within a week? As I'm suggesting that in my opinion piece there. What do you say?
I absolutely agree with you, Stu. I think Biden's going to intervene. He just doesn't know it yet, because effectively the last thing you want to see going into an election is 401ks going down and the cost of eggs and wood and all the supplies to North Carolina going up. This could be, if they fumble the ball, the best thing that ever happened to Donald Trump in terms of the election, because right now, we front-loaded a lot of shipping into the East Coast. So for the next week, it's only going to cost $3-4 billion. After the first week, it could start to cost $4 billion a day. People are going to feel that. And we're in a seasonally weak period of the stock market. As a matter of fact, in elections, the next 10 days, election years since 1955, are the most volatile and the lowest returns of the year of an election year. So you compound that with Israel-Iran, you compound that with the strike. I think he comes in a week and a half and says, if it's not resolved beforehand, and says, we're going to let this cool down to, I don't know, sometime in November.
Well, okay. right. But, so you are telling me that if the strike lasts, 2 weeks, say, the market will take a hit, regardless of what President Biden does?
No question about it. Yeah, I think the market's going to start to extrapolate what that means in terms of, 50% of the ports shutting down, can't get goods. Walmart's going to be hit. Home Depot's going to be hit. And then people will worry about the holidays as well. So certainly the public will, even though a lot of the holiday supply has come in by the end of September. As things run out, as price, look, consumer confidence, it's been kind of dead on the mat. Why? Because prices are up. So if prices start to tick up again, and they associate that with the Harris-Biden administration, it's really going to bode well for Trump going into the election.
I want to get back to this breaking story. The U.S. has indications that Iran is preparing to launch a ballistic missile attack against Israel. Yeah. I'm saying that that is part of the reason for the market's decline. We're down 330 now on the Dow Industrials. Is it a big negative for the overall market?
I think so. We had indications of this headline mid last week, and we saw this type of volatility mid last week. This is a factor, and you have to think about.
See that on the screen right now? The yield on the 10-year Treasury is down. That is the result of a flight to safety. That's people putting money into dead-safe 10-year treasuries. Is that 10-year? Yes, it is the 10-year. Forcing the price up and the yield down.
That's right.
Flight to safety. That's my opinion.
VIX is up. Oil is up 3%.
Oil is at $70 a barrel, I think, on this breaking story. It's happening as we speak.
It's interesting,
One more point.
That last time I was on, I said, if you're on margin, come off margin. And the reason I said that is the skew, which is the price to insure against a 1 standard deviation correction. Think of 10% correction. Hit 10-year highs in the last week. That doesn't guarantee a correction, but it indicates that we're fully invested, but we're off of margin. We'll ride out these short-term bumps through the election. I think we'll do fine after the election. But you have to keep that in mind. We've made a lot of money.
Don't borrow money to buy stocks.
Exactly.
It's not a good
not right now. Yes.
Tom Hayes, good stuff today. Thank you very much indeed.